I think from a financial perspective, I think that I would probably start more on the non-retirement based, type of savings and accounts, right? I've been consistently really hitting and really like maxing out 401k, like retirement savings for many years now, from right out of college, quite frankly. But the one thing I'll be the first to call out is I didn't maximize those non-retirement type things at an early clip. And I think that that's where I missed out, where some younger people, listening to this, or younger people working with their financial professionals, if they're able to do something, doesn't have to be big, but put something away each month that you're able to use in the next 25 to 30 years to better your life, or to, enjoy life, whatever that looks like for you in your unique situation. I think that's something I wish I could have done a lot better for sure.
Well, welcome everybody back with to the Growing Money with Sean Trace podcast. That's me, and I can't even remember my own name right now. Um, I've got an awesome guest with me today. Would you like to tell people who you are and a little bit about what you do?
Sure. Yeah. My name's Anthony Degli Obizzi. I'm a financial planner. I work on the Menasher Financial Group. We've been around for over 60 years, serving clients on the business and individual level. And yeah, my goal with my practice is pretty simple. I want to help you live your best life in the short term, but also not leave things on the table for the long term, and maximizing that retirement as well.
That's awesome, man. I was really like, you commented on a post that I had put up, and one of the things that was really interesting with that is that then I saw a post that you had on LinkedIn about helping someone pay down massive student loan debt quickly using the avalanche method. And that always popped up to me. I love reading about different pay down methods, and I just paid off one of my credit cards that I've carried a debt on. I carried a balance on for a long time, so I'm really excited about that. And I actually used the avalanche method. Not the snowball method, but I was really excited to see you talking about it. Now, can you walk us through how you approach this situation, and why someone should pick the avalanche or the snowball? What's the difference between the two, and why is one better than the other?
Yeah, it's a great question, Sean. I think it really does come down to the person on a unique level. There's no like generic, like one size fits all for this. Some people prefer one versus the other. So, snowball method, that's like what I would say is the quick win method from a psychological perspective. What you're doing is you're attacking the small balances first if you have multiple loans. The idea here is you have 5 loans, you attack the smallest balance first. And from a psychology perspective, you're like, okay, that's a win. I knocked off a loan. So some people really need that and prefer that. The avalanche method is different. The avalanche method is going to say, hey, let's look at potentially what the biggest, balance is and the interest rate going with that, and hitting that one first. Now, from a math perspective, you're definitely going to save more over the long haul going with the avalanche method, just from a pure interest savings perspective. But again, it's, what I do, a huge part of it is emotional. It's not all logical. So you meet clients where they are, you give them the guidance they need, and you kind of fit that around what they're looking to do. So both can work, a combo can work, but I think the most important thing is you have a plan as opposed to no plan, right?
That's huge, and I think that's something that not everyone has, man. It's like people, so many people just kind of do the whole financial thing, and they don't plan the whole financial thing. And it's like, I remember for the longest time, I would get money in, and then money was out. And it was just money in, money out, money in, money out. And there was just this circle of that. And it wasn't thought out. And it wasn't until I started doing this podcast that I started talking to people that I even realized that there was a different way of doing money, that there could be an approach that was more thoughtful, that had an intention behind it. And that sounds like ridiculously, like it should be a simple concept, but not everyone understands that.
Yeah, absolutely. I think to your point, there's this old adage that you've probably heard it. Everybody's probably heard it. You're either you're if you're not planning, you're playing to fail, right? Like without having a plan. And I think that as we go along in our careers, our lives, different like cycles, different seasons of life, you may enhance what you're doing from a planning perspective, right? Starting simple, I think that's kind of key, at least getting something in place. And then as you go along, you can always add to it. It's the old adage too of like, do 1% each day. as opposed to saying, hey, let me do like 50% this week and do nothing for 6 months, right? Just do the 1% each day. And I think we can evolve and improve. That's what us humans are really designed to do at the end of the day.
Yeah, I agree, man. And it really is. Can you I absolutely love the examples of personal like fitness. You know, it's like if I go to the gym and I tell my coach, you know what, I want to lift heavy every day, and he's like, are you sure, man? Like you haven't lifted in a long time. You're out of shape. And but yet if you come in and you sit there and you go, all right, I want to get to this point, but I'm not there yet. And that's okay. It's okay not to be there yet, but if you put a plan into place, man, you can accomplish anything. You know, I've seen these people that are like in their 70s that went and got back into the gym and are completely fit now. You know, it's more about the plan than it is about where you're at right now.
For sure. It's funny you use the fitness analogy too, because that's really how I use that analogy when I talk to people when it comes to like their money flow and their money system, right? So like a lot of people, the old school way of thinking is I have to have a budget. Everything has to be down to a T. And I always say, well, think about a new workout plan, think about a new diet. What are the big limitations there? Restrictive nature. It's really hard to cut everything out, or it's really hard to say, hey, it has to be black and white this way. When you do that, you're more likely not to stick with it. So I actually, when I'm talking to my existing clients or prospective clients, it's more of a focus on me to say, hey, let's create a money flow system that's repeatable and it's habitual, as opposed to just restricted guardrails where it says, hey, every month has to be down to a T this way. I think personal fitness, like to your point, it's a great jumping off point for all areas of life. And it weaves in so naturally to finances. People don't always realize that, but it really does.
Okay. So, yeah, instead of the restrictive guardrails, what do you recommend people focus on?
Yeah, I think the way that somebody, how this all works out is going to vary person to person. And obviously, it's not going to be all one size fits all. But the general idea is your money flows in each month, from your paycheck to your account, right? And you should view the account the money coming into like the checking account as a jump off point. The first thing should be saying, hey, whatever my way of doing this is, pay my future self, whatever that looks like for you, whatever your plan is to be doing that. Then naturally, you're going to have those fixed expenses that they can't change really. They're there, for a variety of reasons, whether they're student debt, home debt, car debt, just whatever they may be. And then the leftover money, that needs to be the guilt-free money because, life is short. I do believe that important to stick to your plan is to be able to enjoy life. If you want that pizza on a Friday night, if you want the happy hour with the friends, if you want to go see the movie and pay for $20 popcorn because that's all, expensive out the window nowadays, whatever that might be, when you view your money in that linear system, I think it's a lot easier than saying, hey, I have to spend X this month. If I don't, I broke my budget. So I think that's more of a natural way to look at it.
It really is a mindset shift, and it's like people will have this mindset of and one of my recent guests was talking about the lattes, and it's like this idea that if you want to be wealthy you got to give up the lattes, and it's like, but it's more than that. It's shifting your mindset to um and shifting your whole like behavior, because it's like one of the most important things is to, you know don't live beyond your means. You know what I mean? If you're spending more than you're making, you will have a problem in the long term. If you are, going in the wrong direction. But a simple mindset of understanding and helping people understand that, um, focusing on your why and what it is that is your purpose for saving the money. What is your purpose? Travel. Like, is that your thing with your family? Is it that you want to save up for a good education for your child? Like, if you could focus. Give me one second. Hold on. Sorry, there's a problem here.
No problem, Sean.
Sorry about that. My daughter had a little accident right
Oh
there,
gosh, you okay?
and just had to fix that. It is the day of stuff going wild while I'm in my podcast. Sorry about
No,
that.
it's all good.
Um, let me. I'm gonna actually spin that into the podcast there, right there. So my daughter just I had to step away for a second. My daughter just came running downstairs. Um, and she was wearing a ring, and the ring had a crack in it, and it was pinching her finger. It had gone into the skin, which is not fun at all. I will get the ring repaired for her. But one of the things is in this podcast, and I had this whole plan, but it ties into our point. Sometimes there are things that happen that you are not prepared for. And this is one of the reasons that I love that you're talking about the debt payoff strategies is because the more flexibility you have, the less debt you're carrying, the more that you can deal with emergencies that pop up. Like I did not know that I was going to be dealing with a little emergency with my daughter's finger right there. But when you carrying that debt, big little problems become huge problems, you know?
They do. They do because you feel more restricted, right? When you have something crazy happen, like a medical thing, a hot water heater goes, just whatever it might be, you feel a lot more pressure on you because you know you're already caved against the wall with paying that debt off. And I think that speaks to what we were talking about before. Having a strategy in place, it takes confusion, it takes anxiety, and ultimately it helps provide clarity. And that's ultimately my goal in working with people is I want to guide you to clarity. What that looks like for each person is going to be different, but ultimately, when you talk about unexpected things happening, right? They're the things I will tell people. You might have a great financial plan put together that fits uniquely for you and has you on a track for success. But maybe it only has an 80 to 90% confidence level of actually succeeding unless we have the risk protection in order, unless we have the blind spots covered up. I think that's why, to your point, it is so important to have measures or have strategy in place so that if the unexpected happens, we're not in trouble, right? I think that's key.
Yeah. Well, and like debt pay down is not like for so many people, it is something that takes time. It's not a quick thing, it's not a quick win always. How do you help people stay motivated when they're in the thick of it? Because man, it can feel slow, and it can feel like you're not even making any progress, especially with large balances. How do you keep people, tracking on the right path?
Sure. So a ton of the clients I work with, are attorneys. That's a huge part of my book of business, huge part of my client base. My wife's an assistant prosecutor, so I have family members they're in the attorney space. It just naturally has fed my business to look very attorney centric. And attorneys are, a fascinating group to work with from the sense that many of them earn a high income, but they're straddled with this debt that we're talking about right now, and they also are susceptible to lifestyle inflation as the money goes up, as the bonuses go up. If they get into the partnership side of things, the money can really compound quickly, but so too can the expenses if there's not a plan in place. When you talk about the debt and staying honest about it, I think the key thing I have found personally, and I've personally really found it in the past year and a half, is that having that set plan with people, it's a lot easier when you can do both, right? When you're simply thinking, "Oh, I have to only pay down debt." Sean, it gets boring. It gets boring when all you're doing is attacking this arbitrary number. But when I'm able to sit with somebody and work with them to uniquely say, "Hey, what's your why?" Because the qualitative, you kind of touched on this right before you had to run for a second there, but the qualitative, in my view, is as or more important than the quantitative of a financial plan. My family's a huge Disney family. We love going to Disney World. We're tracking to go our third time this year in a couple weeks. And I say that to say, maybe I have a client who also is a Disney family, or it's a family that likes to go to all inclusives in Mexico, whatever that might be. If I'm able to sit with you and guide you to be able to put things aside to be able to do those things you love while also saving years off of your debt, that to me is a huge win. And that's what makes my job fun because ultimately I want to know what my clients' goals are because that's what I'm ultimately aiming the arrow towards, getting them toward those goals and only viewing the debt as an obstacle we have to kind of drive around as we go there.
I love that. Well, and I think too, like, coming back to the why, and I think that with my daughter coming to the room, like, for me, having my finances in order is a super important thing as a father, because I want to be able to, if my daughter comes up and says, "Dad, I want to be able to take this class. I want to be able to help provide that. I want to be able to help do these things." And if I'm straddled with debt and I'm just always paying back into my either student loans or credit cards and stuff, it's really hard to do that. And, and I know people, some people don't even think it's possible for them. It's like, well, and you start thinking about it, and then you start looking at all these different things. Well, what is going to work best for you? Is the debt avalanche, the debt snowball? And there's pros and cons to each of them. For myself, I wanted to do the debt avalanche just because I don't know, it was easier for me to kind of wrap my head around the debt snowball, and I still had that big one hanging on above me, and it was really tough. But with I've had friends that have used the debt snowball and they feel those little wins, and sometimes little wins are really good. So I don't know. It's different for everyone. What do you tell people when they start really debating what they want to do, whether it be the snowball or the avalanche or something else entirely different?
Sure. I think let's taking a step back before we even get to the debt conversation. I like to track the cash flow. I do a cash flow analysis. I want to see what's coming in, what's going out. And what I'll do is I'll empower, my clients if they have a way to track that they can do that. If they don't, I have a method. I have a file that I will work with them on to do that. And it's funny, Sean, because what they'll find a lot of times is there are certain things that maybe they don't want to be spending money on, and it kind of got put right in their face when they had to actually go through the exercise, right? Once we get through that, we get an idea of, okay, how much money is sticking around on a month to month basis? What do we have to work with here? That's when I then can do the analysis of their debt. And I can say, okay, if we were to put an extra X dollars a month towards those loans, here's the amount of years and the amount of interest we could potentially shave off. And I think once we go through that entire exercise, a person's able to then understand from their own psychology and how their own mentality is what's best for me. Because there will be some people that, even faced with those numbers that are black and white, they still want to go the snowball approach. And again, that's okay to me. As long as we have a plan and we're sticking to it, I'm good with that. I do make it known from my capacity, hey, you do know you will save interest if we go this way. But if we want the quick wins, we'll go for the quick wins. But I think you have to kind of take them through. There's a one of my favorite movies growing up was Heavyweights. Ben Stiller's in it. It's an old Disney movie. If you go to Disney Plus, I'm sure it's on there. But he always the one quote he says is, "I'm not going to give you the light. I'm going to show you the light." And that's how I look at it when I think about that. Is I want to show you what it looks like, and then you'll have an idea, make an empowered decision. What makes sense for you?
I love that. Well, and beyond the numbers, because there is so much more than just the numbers. Like having this plan is so important, but it's the emotional side too of the person going through this. Whether they feel like they can't pull it off, or whether they feel it's just like this hill they're just trying to climb. Um, what do you tell people when they're, running into those walls, when they feel overwhelmed, when they feel like they're just, they don't even know if they can do it? What are some of the advice that you say, hey, this is where you're at. This is how you keep going?
It's funny you ask that because such a massive part of what I do, and anyone in my profession really does and faces day to day, is the behavioral finance part of things. And I always joke, like, I actually undergrad psychology is my degree. I had a business minor, but from my perspective, I look at that aspect to be such a huge part because guiding people, keeping them staying consistent, there's the old adage where that goes along with the investment side of things of, not being, taking sharp right turns or left turns. But it's so true with the whole debt conversation because there can be those days where it just feels like you're never getting out. You're stuck in a hole and you're never climbing out. I think from my perspective, it's important in this situation to really reemphasize the numbers, show them kind of what we worked out to be their plan. Because when you're able to see, okay, look, we've now done 9 months of this. This is how much we've done. I think when you see the visual aspect, that's what makes the huge impact for people, typically, from my standpoint at least.
I love it. Well, one of the things too that um just the emotional side is like the belief that they can do it. It's like you're the one guiding them and taking them through that. But it leads to like, sometimes people don't even feel they can get through it, but like once the debt is under control, how do you help them transition from debt payoff mode to building wealth and investing in the future? Because it's such a transition. Some people are paying catch up for so long. I know with my personal financial planner, he started working with me and I just never thought I'd be able to see the other side of the debt. And now like, we paid down some credit cards and like I'm looking at, well, now I'm at the wealth building phase. I'm like, I never even thought I'd be able to be there. And so it's amazing that how do you help people start changing the way they view things?
It's a temperature shift, right? Like think of a thermostat, you have to change the temperature at that point because, if we're able to, my goal was always to do a little bit of everything, right? It is to pay down the debt strategically, but also be saving, whether that's for retirement or for short to medium term goals, home purchases, second home purchases, home renovations, vacations, etc. When we get to that point where we've, at least from the debt perspective, we reach the top of the mountain and we're no longer having to be putting money there. I think it's important to make sure we kind of keep things under control, right? We all of a sudden have this cash flow freed up where we don't want to get into further debt by spending frivolously. We want to make sure that we're maximizing it, right? So to your point, I think we recalibrate the plan at that point. It's okay, how are we paying future you with this freed up cash flow? And how are we also going to let some of that flow down to the end of the stream and be that guilt-free money? Because quite frankly, you've earned it. You've paid that huge debt off. It's important to be able to enjoy life. And I think it speaks to my philosophy. My philosophy is that I'm 35 years old. I have a 3-year old. I have a 1-year old. For me, I know I'm saving effectively for my retirement, my wife's retirement, etc. But to me, it's how can I accumulate wealth in the short term to be spending on experiences for my family? And a lot of the clients I work with, they want a similar thing. They don't want to wait till they're age 59 and a half or 65 to enjoy life. So when we do hit that debt payoff, it's it's how do we then start really locking in on the short term and medium term? I think that's so important. I really do. I'm passionate about that aspect of things.
Well, it is the thing of like, how do you help people focus on balancing enjoying money today with creating freedom for tomorrow? Because you can have both. But sometimes people get so focused on either living for today or they're all about tomorrow and they're just living in this space of like I don't know. It's almost like self-imposed limitations that's really extreme. And I mean, I'm not hating on the fire method. Some people love it, but like you get extremes in all areas. And like how do you help people find balance because generally, in most life, extremes are never really work out too well for people.
I think with anything, extremes are pretty much never good, right? Too much of a good thing's not a good thing. Too much of a bad thing is definitely not a good thing. But yeah, I think it speaks back to the whole money flow concept, right? It's having your money come in, it's paying yourself first, it's knowing what your expenses are, knowing eyes wide open what they are, and not underestimating them, and then it's that guilt free, spending from there. But I think the larger thing it speaks to is that most people grow up, at least in my experience. In my experience, the people I encounter grow up and they're conditioned to think, well, you save for retirement and then you have money sitting in your bank account. And a lot of people don't realize that there are ways to, be saving in a bucket of their assets to enjoy life along the way. And maybe that takes a little bit of a runway. Maybe that takes a couple years to save or different strategy to make sure that you can do some of those things. But I make sure that it's a point of conversation because I think that we can't get lost upon that fact. We have to know that, hey, like there is the opportunity to enjoy life. We do want to be methodical. We don't want to forget that we are going to retire someday. We're going to get to the end of the journey from a work perspective. We want to make sure if it is your goal to enjoy life along the way, like how do we do that? And it's making sure we have a plan for that money coming in so that you're not making X and then spending Y, and Y is way greater than X, right?
Well, and that's the thing. Like a lot of people feel you get people who feel guilty about spending and it is about finding the balance between saving and enjoying their money because some people obviously spend too much. But a lot of people are not sure how much should be putting into each area. I was working with my financial planner, and I was like, I have no idea, what should I be saving, what should I be spending, and from this saving, am I allowed to do this? What am I allowed to do with everything? And he was like, all right, let's break it down. But it was I felt guilty. I felt really guilty about spending money because I was like, well, hang on, am I spending it on the wrong thing? And so I think that a lot of that education shines light on it and helps people get rid of some of that guilt because they can come up with a plan.
It does. It does. And I think that you hit a really important concept when it comes to doing like trying to do things yourself potentially, right? It's okay, it's one thing to put it in an account and let's let it grow potentially, right? But then the question becomes, well, what goes in what bucket? There's bucket for me, there's bucket for my wife and I or my spouse and I. There's a bucket for my kids or bucket for my grandkids. Like everybody's gonna have these different buckets. And it's like, how much do you fill them up? What's the savings rate per each bucket? What should go where? And I think that sometimes we as like humans, like we're smart. A lot of people are well read. There's the accessibility nowadays more than ever. YouTube, everything, right? Where it's easy to say, oh, I can figure that out. And I'll say there's certainly a lot of things around the house that I'll just try to DIY myself, but you don't necessarily in the moment notice the failings of DIY. It's 3 years later when you realize, wait a minute, that concrete that I put on my front step has faded away. What did I do wrong there? Like, what would somebody who that's their field specialize in understand how to do that? So I think that to your standpoint, it's like when you have somebody you can rely on, in any field, it does provide a certain amount of comfort because okay, this individual knows what they're doing. They can guide me to what I'm looking for right now. I think that's the key thing because to your point, Sean, there might be somebody who's completely different than you. There's millions of people are, and they're not going to have the same questions. Everything's going to be so unique and so specific.
Well, I love that. If I wanted to train to be an Olympic level athlete, I can't do it myself. I'm not gonna be able to roll up in the gym and say, you know what? In 1 year, I'm gonna be, doing deadlifting at the Olympics. You know, if I had a great coach, probably at my age, I'm not gonna ever be able to do it. But let's just say that I was younger and I wanted to become a Olympic deadlifter. Um, but you know what? If you have a coach, they can take you on the path to get there. They can see the direction you need to be going and shine the light on it because they also are going to know the things that you shouldn't be doing. And that's just as important as what you should be doing. There are things that are not going to get you there, that are definitely going to take you in the wrong direction. And I think that, the problem with do it yourself, and I know we have this whole generation of do it yourself because YouTube is a great resource and now we have Chat GPT, but like the reality is, you know what? It might not be the best advice for you. You know, I was hearing about this. One of my financial advisor friends was talking about Roth conversions, and he had someone who was like, "I'm going to convert everything to Roth," and then they blew themselves up into like this crazy high tax bracket. And he's like, "What was I doing? That's what everyone said to do it online." And like my financial advisor friend was like, "Yeah, but it wasn't the right advice for you." And it's like there can be something that can be great for other people, but it might not be advantageous for you at that moment. And it's like with any tool out there, it's like, and we're just stepping back from personal finance. Like we're talking about, tools are tools. If I give someone a hammer and I go, yeah, this is a great tool, can build a house. And the guy's like, oh, what happens if I hit my hand? Well, it's going to hurt you if you hit your hand. You're not going to know that if you didn't have someone there telling you that and showing you how to use it because these are just tools.
For sure. Now, and to your point, to it kind of point back to the finance side, that's how I describe income. Income's a great tool. Like attorney clients that I have that earn a high income, fantastic tool. But if you use it effectively, and if you have the coaching to use it effectively, you're being guided to use it effectively, it jumps right back. You can hand me a hammer and nails and tell me to build a house. And Sean, I'm probably never building a house by myself. I can tell you that right now.
I'm with you, man. Well, if you were to give someone advice, three things that they could consistently do with money, what should they be doing?
Yeah, I think number one is tracking it, having some sort of system, right? Something that mirrors what I'm talking about, where you're paying future self, future you. You're then hitting your expenses as they flow down, and then you have your guilt free portion. I think that's super important. So that's one way I would look at it. Number two, I would take that even a step further. I'd organize your money into three buckets. I think about your money as your current money, right? Your checking savings, money you're going to use, for pizza on a Friday night, as I said earlier, something of that nature. All the way over here, you'll have your retirement bucket, and the different, nuances to go into that. Let's go back to the, enjoying life and for the future in that middle bucket. That's the bucket that matters so much, I think, to many people that I talk to. It's being able to save for the vacations, being able to save for the home renovations, maybe the first time home purchase, maybe the second home purchase in a mountain house or beach house, where that might be. But that's such an important bucket. So I think that it's really important to not only track your money as a system, but then to also, look at the buckets and make sure they're organized and there's diversification within those buckets. The third thing is not going to be exciting for anybody to hear, really, Sean. But I always tell people, when I'm talking to a potential new client or my existing clients know this, I'm not a yes man. I'm going to point out things you don't want to hear. And that to me is really important. So the third thing, it's not the exciting thing, but it's having some element of risk protection in your overall strategy, making sure your blind spots are covered, and a lot of times you can do that through maybe your employer. If there is some different risk strategies they offer you from the insurance and income protection side of things, but that's not always adequate depending on your income level. I know specifically with a lot of my clients, it's usually not. So it's important to know what you have, because if something were catastrophic to happen, as we saw earlier, things happen crazy out of nowhere. It's just good to know that you're not going to be liquidating all the money you've been saving up to meet a bad situation that's occurred to you. So I think that, number one, tracking the money. Number two, having the nuance, buckets for each of the way the money goes. And then three is wrapping a bow around it and protecting that money with, some strategies for risk protection.
I love that. And it's like I think that people will start moving forward and getting things going, but then again, like I'd said, like or we had said, if you don't have a plan, what are you even doing? It's so I love the idea of having these different things laid out so that people can start sitting there and going, "What am I hitting everything in step one? Am I hitting everything in part two? Am I hitting everything in part three?" Because it's something you build. Like, when you're building your financial fitness, you have to start off with this stuff. You get that stuff all taken care of. Well, let's move to the next level. And we started out with knocking out debt, and then we're moving into like building wealth. And it's like there are these stages to things that you have to go through. But let me ask you this: if you could go back in time and give your own self some piece of financial advice, what advice would you give yourself?
It's a great question. There's a lot of things I do if I could go back in time. Now, I think from a financial perspective, I think that I would probably start more on the non-retirement based, type of savings and accounts, right? I've been consistently really hitting and really like maxing out 401k, like retirement savings for many years now, from right out of college, quite frankly. But the one thing I'll be the first to call out is I didn't maximize those non-retirement type things at an early clip. And I think that that's where I missed out, where some younger people, listening to this, or younger people working with their financial professionals, if they're able to do something, doesn't have to be big, but put something away each month that you're able to use in the next 25 to 30 years to better your life, or to, enjoy life, whatever that looks like for you in your unique situation. I think that's something I wish I could have done a lot better, for sure.
It's awesome. Well, where can people find out more about you and look you up to if they want to reach out and connect with you?
Yeah. So LinkedIn's definitely number one for me. I'm very active on LinkedIn. Follow me there. I make the intention to have some sort of content go out daily, educational. I also do a lot of lifestyle stuff. I want people to understand who I am as a person. I think it's important nowadays to understand who people really are and learn about their families, their lives, etc. But yeah, LinkedIn is definitely the number one place you can find me.